Hello, my name is Steve Bigelow with the Candlestick Forum. Our special stock recommendation this week is based upon a candlestick chart pattern, the fry pan bottom. Now, patterns work much more effectively because we know investor sentiment works the same way time after time. So when we see a fry pan bottom, we've got some major benefits. One, we have a high directional probability of which direction the price move is going to occur. Secondly, the magnitude of the move is very strong. So instead of just buying a uptrending stock in an uptrending market, you want to go after the strongest stock price moves, which are developed by a fry pan bottom breakout. And then the third aspect is a fry pan bottom is an accumulative buildup of investor sentiment. So it's going to be less influenced by a major change of investor or overall market direction. So right now we can use the pattern of a bobble breakout that we're seeing in the Dow that came right back to the T-line, supported there a couple of times with dojis, came up strong today. Now we know that if they trade this positive tomorrow, the probabilities are extremely high. We're going higher because this basically is a JHook pattern, more defined as a bobble breakout because it's breaking out through a level that everybody was watching to see it acted as resistance. We could see our T-line was acting as support. And then if they open up positive, everybody else can see that the 50-day moving average was not acting as resistance anymore, and they start coming in, confirming our JHook bobble breakout. So candlestick analysis basically utilizes the candlestick chart patterns to improve our probabilities of projecting which direction a price move or a market move is going to do. So the fry pan bottom is a very easy identifiable pattern. It looks like a big fry pan bottom. And it has major attributes to it in the sense that as long as once it starts up and it stays above the T-line, we can stay long until we see a candlestick sell signal. But the probability factors tell us that once we see this uptrend, this slow rounding fry pan bottom, we can stay long as it stays above the T-line. And we know that this pattern is going to be relatively indecisive. But there are patterns such as our recommendation on ADGI where we were buying right here because here's our breakout level where the pattern started. Now, if this was a 4% move, you probably wouldn't pay attention to it. But the fact that we could be buying down here and have it move up toward our breakout level and produce a 40% move, obviously that's substantial. And then what do we expect once it gets to the breakout level? Either it fails, we close out the trade, or if it breaks through, we know now we have a strong breakout, which is what we expect coming out of a fry pan bottom. That would probably make the 50-day moving average your next target. We recommended blend because there was your fry pan bottom. And notice how it did a JHook pattern right here at the 50. This is 2 + 2 analysis. When you can see one pattern setting up for another pattern, we call this the classic pattern, which is basically a fry pan bottom followed by a JHook pattern, or the prerequisite of a JHook pattern is a strong price move. The result of a fry pan bottom breakout is a strong price move. They work together in conjunction. So this is nothing more than knowing how human nature works the same way time after time. So our recommendation is based upon a fry pan bottom followed by this belt hold signal. A belt hold signal pretty much tells us that where the bulls and the bears were fighting, the bears knocked it down and the bulls sopped up all the sellers, so they're out of the way, which means if they open this positive, there's no or much less sellers in the way, and you're at a fry pan bottom breakout the probabilities on positive trading is that we're going into another wave of this magnitude. Again, this isn't rocket science. This is just illustrating what the Japanese race traders have illustrated for us of what happens to human nature, what happens to the buyers and sellers, and where the strong price moves will start. So that's our recommendation. Again, it needs to open positive, and then you can stay long as it doesn't close back below the T line. That'll be it. We'll see you in the chat rooms.